Welcome to BizTech's Midday Market Watch. Our guest today is Stephen Innes. He's the Chief Global Market Strategist at AxiCorp. Now, welcome to the show, Steve.
Thanks, Brian. Thanks for having me.
Now, before we get your insight, Steve, we're going to take a look at how markets in the region are actually performing right now. Now, it's largely a sea of green. We've got the Nikkei trading at 26,416.98. It's up just under 1% at 0.96%. Shanghai Composite is now slightly trading down at 0.22% at 3,395.33. The Hang Seng is trading at 26,814.66. It's up 0.85%. The ASX 200 is up 0.83% at 6,698, and the Kospi is up marginally at 0.06% at 2,619.32. Over in Singapore, the ASX 200 is now trading at, and it's just opened a few minutes ago, waiting for the quote, 2,900.82. It's marginally up 0.32%. And Bursa, over at Bursa Malaysia is trading at, and I'm just waiting for it, the thing is a little bit slow today, 1,595.19. It's up 16.80%. Now, Steve, the Dow went up over 400 points yesterday, closed above 30,000 for the first time ever. What's fueling this optimism that has obviously spilled over across the world, including Asian markets?
Yeah, there's just a lot of good stuff going on right now. I think with multiple vaccines in the pipeline are really driving the narrative right now. Like it's almost like joy to the world is ringing well before Christmas right now. And this is great. But if we look at what else is going on, we have a fall in the existential risk premium around the US election narrative with President-elect Biden now being able to sort of start to move into the White House. That's really good because that drops a lot of those security concerns and possibly will move forward a lot quicker as far as rolling out some much needed stimulus to the current phase of the market. But I also think all that is getting dovetailed by Janet Yellen's appointment at the Treasury. If you look at that in context, she is just a super dove and she's just a deficit dove. And this really spells well for those looking for the markets to return to full employment. The expectations here, she'll be putting political pressure on the feds, but I don't think she'll have to pressure them too much because she aligns up pretty well with Jay Powell. So we could be looking at the new two policy power brokers in the world right now between Janet Yellen and Chair Powell, because they're both singing from the same dovish song page. This is quite good for markets, and I think this is bringing in this new wave of optimism along with the surge in the vaccine news.
Steve, another old hand that's looks like he's coming into the picture is John Kerry. That's also, I think, a move that's positively seen by markets because of his relationships with China.
Yeah, I mean, it really is. I mean, it's, like when we can look at the context of what's going on right now, I think the economic impact was really accentuated through the years due to the trade war rhetoric. And I think we're not going to see the same escalation of tariffs. In fact, I think we'll probably see a rewrite in the trade deal completely and may even a walk back in all those tariffs. However, that doesn't mean that the US and China relationships are going to go hand in hand here. We've still got some contentious issues to deal with, specifically on the intellectual property rights. And this all revolves around, narrows around technology. And of course, the biggest center of concern right now is Taiwan. We've got US Navy admirals visiting Taiwan, and that's not going over too well right now. And it's like almost like all hands on deck here in China. But, we still have Trump in office for a couple of more months, and I know he will probably lay down some more executive orders against China. And the problem here, this is going to be incredibly difficult for the Biden administration to roll back, because if we look at sentiment towards China in the US, it's still they're still viewed as politically unfavorable, where there's a common consensus between Democrats and the Republicans. They don't like China, and that's the problem. And so it's going to be politically unwise to roll anything that Trump rolls back immediately without some sort of compromise coming on the other side of the equation from China.
And Steve, now on a different note, because we've just got Bitcoin that reached the 19,000 mark yesterday. And it's just a couple of $100 off its all-time high. Now, what's fueling the surge? Is it the fact also that there's only 21 million Bitcoins that will ever be produced? And because it's of a finite supply, is there a shifting mindset that perhaps it could serve as some kind of store of value?
I think if we look at it through the lens of e-commerce, I think it's intrinsically sort of morphs into this blockchain technology use going forward in an economy that's going to probably be more driven by e-commerce than traditional banking. And I think this is where blockchain excels. But when we look at blockchain, Bitcoin is so intricately interwoven in that capacity. And I think this is why Bitcoins are becoming popular. Even PayPal is now allowing their customers the use of Bitcoins for storage and also for transactions, which is huge. But we're also seeing a big buy-in from the institutional investors. There's still some old habits that the institutional investors, hedge funds at all are going to roll over the markets. That's not really the case. These guys use excellent risk management techniques and all this stuff that was happening early in the days when a few hedge funds were there. They were probably more aggressive, but that aggression is sort of pared back because we've got Fidelity and we've got other big players coming to the market. So I think the fact that the stronger hands are supporting the markets are really, really helping out sentiment. Getting back to the finite topic again, yeah, exactly. I mean, we're seeing lots of bigger players, not necessarily your traditional Bitcoin players, coming into the play. And I'm talking about online gambling casinos, a matter of fact, that are
that's interesting. Okay, I didn't know that. Okay.
Yeah, they're buying Bitcoins because they want to hold Bitcoins because they think Bitcoins are going to be a popular mode of transaction on online gambling scenes over the next few years. So, all this gets wrapped around the currency debasement story, although I don't really fall for the currency debasement story at all because, the US dollar is not going to run too far from its current level. I mean, who wants to sell the dollar really aggressively to debasement levels? It's just not going to happen. So I'm more leaning towards the use of technology and broader use of blockchain technologies moving forward in the new normal economic society that we're in.
Steve, there's a lot of cryptocurrencies out there. According to CoinMarketCap, as of end of September, there was 6,955 different types of cryptocurrencies. But besides Bitcoin, what other cryptocurrencies are the institutional investors looking at? Because that would seem to be a safe option to put my money in.
Yeah, I think Ripple's attracted a lot of attention and continue to do because it's obviously a little bit lower priced and it's a little bit more easier to digest for the common person. I think there's a relatively good two-way markets that are getting established by the big players. But, I think eventually we're like we've seen in basically most assets as they mature, you're going to see a concentration of risk into a fewer products. So I would expect that pool of assets to shrink more broadly, either whether it's going to be they're going to fail because of less use or whether they're going to be taken over by the bigger crowds. And this is stuff that we're going to have to see how the market develops over the years. But I think cryptos are here to stay. I've always thought they're here to stay. I just don't necessarily agree with the price. That's the problem.
I have a problem with that as well.
Yeah, I don't agree with the price, but the market dictates those rules, not necessarily my opinions. So there's obviously, as Ray Dalio said, probably missing something in this whole affair. I'm completely missing it also, but it's just too big to ignore though when you see a Bitcoin trading back up at 20,000 after trading a year and a half ago at 4,000. So there's something really happening in the space. In my view here, it's all wrapped around the blockchain technology and how widely that's going to be embraced going forward.
And Steve, what role or what percentage do cryptocurrencies play in your portfolio? Your personal portfolio?
None. I don't own any. To be honest with you, I owned cryptocurrencies at the beginning simply because a friend of mine who I worked with closely opened up an online crypto exchange and I intrinsically bought them. They were very, very cheap. And to be honest, I completely forgot about them until they went up, the first bounce that they went up. And I said, oh my God, I'm very wealthy here. So I only had 3 of them. So I ended up selling them on the first pass, but I've never really been enthralled to get back into the markets. And perhaps I should have. I'm looking back now with nostalgic yearning at the fact that I could have bought these things at $4,000 or $5,000 only 12 months ago. So I made a mistake not owning them, and I think I'm going to learn my lesson next time around. If cryptos fall below 10,000, I think I'll be a buyer at that price.
Now, Steve, thank you very much for your insights. We've been speaking to Stephen Innes. He's the Chief Global Market Strategist at AxiCorp on BizTech's Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology.